Hannibal and Oakdale, Ohio, with 222 megawatts of combined capacity. These sites have 122 megawatts of current capacity and approved to expand by another 100 megawatts in 2025. Simultaneously, MARA has begun developing a 150 megawatt operation in Findlay, Ohio, which already has 30 megawatts of capacity. These three facilities have a combined interconnect approved capacity of 372 megawatts, which MARA intends to fully energize by the end of 2025. Compute for these sites is purchased, secured, and ready for deployment. These data centers contribute to the resilience of MARA's flexible compute portfolio. This initiative increases MARA's exposure to PJM, one of the largest and most sophisticated independent system operators, or ISOs. Once energized, our data centers will be further diversified across multiple jurisdictions, ensuring that no single ISO contains more than 50% of our owned and operated capacity. We intend to further expand and diversify our portfolio of owned and operated sites, which we expect to yield significant cost savings. These growth initiatives align with our strategic goal to position MARA as one of the most cost-effective and cost-efficient operators in the industry. And with that, I'll hand it over to Salma.
Thank you, Fred. Through our proven discipline and data center expertise, we acquired these assets at a multiple of approximately $270,000 per megawatt, based on approved capacity and after customary adjustments. This is one of the lowest disclosed multiples amongst our larger publicly traded peers, which demonstrates our unmatched ability to deliver accretive acquisitions. As the largest, best capitalized company in our space, MARA has privilege of reviewing every potential M&A opportunity on the market. We have been at the table for every scalable transaction announced this year, and if those opportunities traded to our peers, it was because we passed on them. Our M&A track record reflects our discipline in organic growth and our focus on maximizing shareholder value. Furthermore, these data centers will increase our total owned and operated compute capacity by over 70%. Owning the sites will provide us with greater operational control and could further reduce our operating costs at Oakdale Data Center, which is part of this acquisition, up to 50%. Much of the future capacity is alongside operating generation, power opportunity, providing opportunities for cost reduction, power redundancy, and development optionality. I want to remind, in 2024 so far, MARA has secured approximately 1 gigawatt of nameplate capacity through acquisitions and greenfield site developments. As a result of strategic expansion, the company's total nameplate capacity has increased to just under 1.5 gigawatts, with approximately 65% of this capacity proudly owned and operated by MARA. With that, I will hand it back to Rob.
Thanks, Salman. Thanks, Fred. Now I'm going to turn the call over to Kevin Dede from H.C. Wainwright to begin our interview. Kevin?
Thanks, Rob. Hi, Fred, Salman. Thanks so much for having me on. I think maybe, Fred, it probably makes sense to start with the deal you just closed. Why don't we talk a little bit about how you see it sort of folding into MARA's overarching thesis in driving energy costs to near zero?
Sure. So as you look at any acquisition we do, we're focused on obviously lowering our costs of operations. These particular sites, one of which we had some capacity operating at, allow us to lower our cost of operating pretty significantly. Our goal over time as we continue to grow our capacity is to focus on sites where we'll continually able to lower our cost to operate. So by way of example, if you look at the on-site generation that we recently announced through our partnership with Engon, we're able to generate electricity at a cost somewhere around 1 cent per kilowatt hour, which is significantly lower than the typical market price of around 4 cents per kilowatt hour paid for by miners using grid energy. And as we continue to expand those opportunities, and by the way, that type of stranded gas opportunity in gigawatt hours measured is over 1 million gigawatt hours per year of capacity when you look at the overall market availability of gas. And so we believe that you'll see miners like Mara go after these types of opportunities where we own and control our own power generation. And over time, Mara will be building more and more owned and operated generation capacity and find ways in partnering with AI companies, hyperscalers, providing services around energy management, which will allow us to subsidize our costs to operate as we co-locate with them. And I think over the next few quarters, you'll see us expose a little bit more our plans in those areas, what we're doing, the partnerships we have. And I think it will make it very clear what our vision is as we transition from a traditional mining company that has been predominantly dependent on third-party operators to a mining company that's very focused on owning and operating its own resources, and a mining company that really focuses on providing energy transition capabilities to companies way outside of mining.
Specific to the Ohio sites and their connection to PJM, what sort of flexibility do you have in your use of power and maybe an ability to resell it back to the grid?
You know, PJM gives us the opportunity to leverage power trading, gives us the opportunity to leverage hedges, gives us the opportunity to do all the things that as a large load consumer we would want to be able to do. And I think the benefits of what we've learned of how we can operate in Texas, now being able to operate with PJM being one of the largest ISOs in the space, will give us a lot of flexibility in managing power costs. And as we continue to grow and expand our footprint there, it'll be more and more powerful over time.
I know you mentioned the next couple of quarters as probably being more demonstrative of your zero power push, but if we took a look at the progress Mara made in the third quarter, are there any highlights that you could point to? The multi-tentacle facet strategy that Mara has implemented that could point to power reduction?
Well, again, the N-GON, sure. I mean, the N-GON partnership is a very early first step, where you see us essentially going after micro data centers at the edge. And as I said, the opportunities there are very deep and very broad across oil and gas fields, domestically as well as internationally. And the domestic opportunities themselves are huge. And we believe we now have a core competency in being able to do this and execute it at scale. And as we continue to grow, it will become a bigger and bigger portion of our fleet and our owned and operated data centers.
Okay, let's switch gears a little bit and talk about, I think it's almost 27,000 Bitcoin Mara holds at this point. Can you talk a little to your HODL strategy and how Mara how it views it as an adjunct to building the company's presence, where Mara might be able to take it, what sort of financial implementation might drive greater yield on it? Maybe a little more insight on how you see your HODL strategy.
Sure. So I think one way to look at it is, we have purchased roughly 6,400 BTC at an average cost of around $60,000 per BTC. And you think about the convert transaction we did in late August, where we purchased a little over 4,000 Bitcoin. That transaction has netted a huge IRR to our shareholders over a very short period of time because of where the price of Bitcoin is today. And if you recall, at the time we said the reason we go into the market and opportunistically buy Bitcoin is because we believe that there will be a price inflection point where it is of huge value to our shareholders for us to go buy Bitcoin versus investing assets into building mining capacity, which won't generate Bitcoin for potentially 12 to 18 months. And so here is a very good proof point of that strategy playing out very positively for our shareholders and for Marathon. If you look over the multiple purchases of Bitcoin we've done over the years, it has netted a very healthy return for our shareholders. And we believe that we will continue to execute a strategy of a hybrid of buying Bitcoin when it makes sense and mining Bitcoin when it makes sense. Our average cost of the Bitcoin in our HODL today is somewhere under $50,000. When you average our cost to mine of the Bitcoin that we've mined in our treasury and the Bitcoin that we have acquired. And so if you look at that compared to today's price of Bitcoin, a very significant appreciation in value. And today, I think we hold a little over $2.2 billion.
Almost 2.5.
Almost $2.5 billion in Bitcoin on the balance sheet. And now to the latter part of your question. So what do you do with that Bitcoin? Well, there are ways to generate yield on that Bitcoin such that we can generate income from it. And that income can generate either cash to buy more Bitcoin, cash to subsidize SG&A expenses, cash to lower power costs, cash to fund equipment purchases. So it gives us financial flexibility. We can also collateralize it and borrow against it. It gives us a lot of options. And having amongst one of the strongest balance sheets in the industry, we believe we are very well positioned for whatever the market brings. At the current moment in the marketplace, with this current jump in the price of Bitcoin, we believe the period of low cost growth is likely coming to an end, and companies will now be forced to compete for capacity in a very different way than they have in the past, and growth will become more and more expensive, and the smaller miners will become more and more challenged, which will make consolidation a more attractive option. However, we are not in the business of going out and paying $1.6 million a megawatt for capacity like some of our peers have done. Look at this transaction, $277,000 a megawatt, almost half of what we paid at the beginning of this year for the other assets that we acquired. We are going to be very smart. We have taken advantage of the pricing of machines and ordered more machines than we needed for our 50 exahash goal, such that we would be ready for the growth spurts that come next year. And we believe the market next year will be capacity constrained for some miners. And those of us who have planned in advance, who have machines in inventory, on order, and optioned at attractive prices, and have the ability to build their own miners. And there are very few of our peers who are able to build their own miners and have access to chip supplies for it. We'll be the ones that over the next years, leading into the next halving, will dominate this marketplace. And we think between our tech stack, our ability to build custom miners, our two-pick immersion technology, which lets us run miners at significant levels of overclock and optimize our use of energy, together with our focus on near zero cost energy, will make us the predominant miner in this industry from a cost perspective, Arnold.
So Fred, apart from an opportunistic approach, how should we think about Mara's priority in capital use between Bitcoin on the balance sheet, acquisition of sites, deployment of more mining machines, partnerships with potential companies to reuse heat, and the assorted other opportunities you have, not to mention software development?
Kevin, very big question. Almost more for an analyst day type of fireside chat than we have time for today. But you can think of it this way. We have a very well-defined plan for organic expansion that combines a focus on owned and operated energy, owned and operated data centers, and collaboration with large-scale AI hyperscalers. We have a very well-defined plan around our technology stack and how we're going to deploy it. You'll see next generations of our 2PIC miners focused specifically for AI, also combined functionality, AI and mining. You'll see different form factors of those specifically designed for edge inference locations, where we'll be able to essentially operate anything from 4U up to 48U in a single two-phase immersion container. And these systems will continue to get more and more efficient and more able to leverage the ever-increasing power and heat densities that come from the AI world. And as we move up the stack towards our pool and software systems for energy balancing, I think you'll continue to see over the next year to 2 years a series of announcements which start positioning MARA as one of the leading solutions providers in the area of essentially optimizing idle electrons, no matter where they stand.
The Ohio deal's very compelling, Fred. Was there any sort of special negotiation sort of behind the scenes that where you were able to elicit such favorable terms? And how much more supply at that rate do you think exists in North America, given huge demand for HPC and AI?
Well, I think it comes down to some sites are suitable for AI and HPC and some sites aren't. You know, it's like that old commercial. Sometimes you think like a nut and sometimes you don't. And there are sites that really only are good suited for Bitcoin mining because they have load that has to be curtailed. They don't have access to high-speed internet connection or fiber connectivity, or there are lots of other reasons. And so we believe that if you look at the multitude of Bitcoin mining sites that have been built over the years and the amount of projects for power, there are lots of low-hanging fruit in this type of price range. The challenge is scale. Right? MARA is of a scale today where we're not interested in 20, 30, 40, 50 megawatt sites. You know, our focus is on the 100 megawatt and larger scale, especially around what we call utility scale mining. For the on-site generation, we're very focused on micro data centers because we have the technology to do it because of our immersion technology and our container technology and software, our ability to deploy miners that are very fault tolerant and can operate without human assistance, and the fact that we can generate our own energy, which means our overall cost to operate is very, very low. And then as we look more towards the future, ultra high scale, or what I would call hyperscale, comes from relationships with hyperscalers, where there's a very symbiotic relationship to be had between Bitcoin miners and large loads in the AI HPC space. And I think what you'll continue to see is MARA scaling from power all the way through to energy management, fully across that spectrum, across a variety of solutions.
So you've mentioned 2PIC a couple of times, Fred. I know that the letter referred to some tanks that you intend to ship in Q4. I'm wondering, aside from the ones that you had running in test facility, what you might be able to say about them and how you've geared up production. I know letter alluded to a order rate, like a third-party order already. How are you allocating resources to meet that demand, as well as upgrading some of your own sites?
Sure. So, we are blessed with the fact that we have one very large customer called Mara, who is a very nice customer, but they're a hard negotiator on price. And then we have third-party miners and data center operators who are very interested in the technology, and so have been willing to place orders with us to test technology and see its applicability in deploying across their systems. And so those systems being shipped, I think nearly 40 systems between what Mara is using and third parties will be delivered by the end of this year and installed. We are currently operating 2PIC in production, not just in test, and getting some very good results. I mean, in some cases, we're seeing overclock well over 20% in systems very efficiently and getting very good results. The additional advantage of 2PIC is there's a very low PUE, which means the mechanical load for cooling is very, very low. So the overall power draw of the facility comes down, which means you now have even more energy that you can apply to mining Bitcoin. And so the initial results seem very attractive, and we'll continue to ramp production at the same time as we're iterating the design. We have gone from the 2PIC solution that was designed specifically for Bitcoin miners, moving towards a 2PIC solution that is designed for a hybrid application of a mix in the same tank of miners and AI rigs, to a 2PIC solution that allows for hot swappability of AI rigs or miners in multiple form factors for large-scale deployment all the way down to micro data centers. And what we're seeing is a very significant amount of interest in people looking to test this and see how it works. Two-phase immersion is still a new technology, right? Two-phase technology is something that not all systems can just be dropped in and operated in. And so we're working with OEMs to make sure that the systems that they manufacture work appropriately. Mara has built and designed its own custom miners for 2PIC, which are ultra high density, such that we can operate in what would normally be a 300 kind of kilowatt implementation over a megawatt of miners in a single 2PIC tank. And we're seeing really good results with that. So, we will continue to be more and more vertically integrated in what we do and become less and less dependent on supply chains from offshore manufacturers, providing technology that is really designed for the average Bitcoin miner, as opposed to a highly optimized, highly integrated miner like ourselves.
The miners themselves that you referenced here, Fred, are they the result of the work that you've done with Auradine? And if you wouldn't mind commenting, maybe you could give us a little insight on how you see wafer source, given hubbub of the and controversy surrounding Bitmain and its AI partner at TSMC.
So, in regards to Auradine, obviously, yes, we're using Auradine miners, both their standard miners as well as down at the silicon level and optimizing for our own application. That being said, we have designed our 2PIC miner unit to be able to use hash boards from third-party providers as well. And this is not a product we're looking to sell to anybody. This is a product we're keeping for ourselves. Sorry to be selfish, but the advantages of the power densities and what we do in these systems is such that we believe it's better that we use it for our own purposes. That being said, we have optimal flexibility in that we can use Auradine chips, we can use Auradine hash boards, we can use third-party hash boards in these devices, which we then modify for our specific use case. As you look at wafers, 3 nanometer wafers are in short supply because of what's going on in the GPU space. However, we have not seen any indication from TSMC that Bitmain's supply or access to wafers has been impacted. We are seeing that certainly Auradine has ample access to wafers and is getting all the supply that they need. As we look at next generation technologies, I think you won't see 2 nanometer appear on the marketplace, most probably for closer to 3 years. And I think what you're going to see before that is a re-engineering of how miners actually look and operate, such that the geometry will be much less important than how the hash board is designed, such that you could even take 7 nanometer chips, run them at lower power and higher frequency, and get the energy efficiency of much more expensive 3 nanometer parts and not have any of the supply chain constraints. And so I think you're going to see a lot of innovation around miner technology by third parties, and this market is going to really start becoming very exciting relative to the options that miners are going to have, which will mean less control from the hardware vendors as times roll on.
Well, that's long overdue. Happy to hear that supply, wafer supply isn't constrained. Fred, the shareholder letter made it explicitly clear that Mara harbors no ambition to run AI sites. You have 2 new board members that have great experience in both data centers and energy. I guess what I'm curious to hear your perspective on is how you might be able to capitalize on that experience and incorporate their consultation and input in Mara's day-to-day operation.
Kevin, I'm obviously not going to share our 5-year strategic plan with you on the phone right now. I'm sure there are friends
maybe next quarter.
Yeah, I'm sure that our friends at CleanSpark and Riot would love for us to do that, but we're not going to do that today. What I will share is that if you look at the hosting business or the GPU as a rental service business, H100 rental prices have dropped by 75% in the last 6 months. If you think that the technology obsolescence of Bitcoin mining is aggressive, welcome to the world of GPUs. It is even more aggressive. Anybody who comes from the Bitcoin mining side, who is excited about going into the hyperscaler or large scale data center for AI HPC hosting business, is in for what I believe will be an abrupt surprise come 2 or 3 years when the hyperscalers deployments of the data centers they have in production today start coming online, and there is no way for third-party independent providers to compete on price or capability or functionality. The hyperscalers will have first choice of hardware, the hyperscalers will have first choice of power, and the hyperscalers will have first choice of customers. And so I think companies that are able to tie up agreements in the very short term today, as long as those agreements, those hosting agreements can be enforced and the customers that are behind them are able to pay over the long term, I think they're lucky and I congratulate them. I think anybody else trying to go into this business today is looking at a race to the bottom from a cost perspective and a very challenging capital market once people wake up to the fact of how difficult it really is to run an AI HPC hosting business when you're not a hyperscaler yourself. So not to take up more time on this, but think of it, we are a technology company. We are a company that is focused on bringing to market high value solutions that will generate a great return for our shareholders. We are not chasing the next hype trend. We're not chasing the next fad. We're focused on delivering true value to the marketplace. And I think if you look at the team we have built and continue to build, you look at what we're doing in adding talent and knowledge to our board, you can start getting an idea for the direction of the types of technologies that Mara will begin to continue to bring to market and the solutions that we plan to bring to market that will position us very differently from anybody who looks at us as just a Bitcoin miner.
Oh, fair enough, Fred. Thanks. We'd be remiss if we weren't to discuss the events of last week and the subsequent reflection in Bitcoin price. I'm not one to opine on politics at all, but I'm certainly curious to your perspective. Definitely warrants some discussion. The Merrill letter made it pretty clear that you folks have been involved in the process. I guess I'm wondering whether or not you think that continues, how you see the changes anticipated and reflected in the industry going forward. I mean, aside from perhaps Mr. Gensler losing his job, what else are you looking forward to as U.S. government moves toward a more crypto-friendly stance? And how do you see Mara taking advantage of it?
Absolutely. Well, I think, one of the great advantages of the United States form of government is that we have three branches of government. What I'll focus my comments on are the legislative and the executive branch. If you look at the results of this election, 200 members of the House of Representatives and close to 18 senators are joining the legislative branch who are all pro-crypto. The crypto industry spent over $100 million in targeted campaigns, and Mara, together with two other of our peers, co-founded the Bitcoin Voter Project, which specifically targeted campaigns and individuals who felt crypto was important and got them to go out and vote for candidates that were pro-crypto. The most significant race of which was the Sherrod Brown-Bernie Moreno race, where the crypto activists were able to unseat Sherrod Brown, one of Elizabeth Warren's co-collaborators, in trying to drive the anti-crypto army. So we believe the legislative branch will have a much more open perspective on crypto, and we fully expect the Republican majority in the Senate, and we'll see how the House turns out, to put forth legislation that we believe President Trump will sign that provides for market structure, provides for stable coins, and provides for a regulatory regime for Bitcoin and crypto that will enable banks to custody and collateralize crypto and Bitcoin assets. And you'll see other forms of ETFs and other types of securities come to market that'll provide institutional investors with a plethora of options so that they can take advantage of Bitcoin and other crypto assets as investment instruments. In regards to the executive branch, if you look at the two campaigns, it was quite obvious from Vice President Harris's comments, I believe it was on The View, when asked, what are you going to do differently, if anything, to President Biden? And the Vice President answered that she would do nothing different. That was a clear indication that the war on crypto was going to continue. And it was a clear indication that the Bitcoin mining community needed to rally around the Republican cause. President-elect Trump clearly stated at the Nashville conference not only his support for Bitcoin, but his belief in Bitcoin as being something that should be mined in the US, and that the US should hold the strategic reserve of such that they could project power within crypto markets, and specifically in the use of Bitcoin as this international trade settlement asset, and hold a strategic significant amount of Bitcoin, similar to how the US government holds gold. Now, Senator Lummis has put forth a bill specifically to establish a strategic reserve in the belief of two things. One is the ability to project power, but more importantly, if Bitcoin continues to appreciate as it has, and the past weeks are a great example of how it can, then a significant amount of Bitcoin held by the US government could be used as an offset to the federal debt. The only other alternative to paying that debt is to allow inflation to run wild and inflate down the debt, which is not something I want my children or grandchildren to have to experience. And so I know I personally will do anything to support government initiatives that promote the ease and use of Bitcoin as an investment asset and provide tax legislation around allowing Bitcoin to be used for transactions and not have those transactions be taxed, allow miners to operate freely and have equal access to power in the US without being targeted, and allow more and more Bitcoin to be mined in the US such that the US is able to ensure that it has a significant amount of block space to protect the freedom of transactions in Bitcoin, regardless of use application, as long as it's lawful within the US and by people investing in the US.
I'm going to switch over to Salman for my last question. Salman, taking a step back and looking at Mara's overall financial performance, what do you see as the highlights? What worked well, as well as you had hoped? And where do you think you'll need to move to improve performance? And what do you think we could expect to see going forward?
Thank you, Kevin, for the question. As we've reported today, our energized hash rate has increased 93% to 36.9 exahash per second in the Q3 of this year versus Q3 of last year. And as you know, in this sector, our production is public information after the quarter end as well. So we have hit more than 40 exahash already. And we are driving towards the 50 exahash target that we had set for ourselves that was revised middle of the year this year. Now, in terms of total block space, another great highlight for us, despite we were 32% higher compared to Q2 of 2024. And that's a significant increase from a sequential quarter standpoint. In addition to that, obviously that impacts our revenues. Our revenues increased 35% compared to the same quarter of last year. There's an impact on Bitcoin price, and there's an impact of halving, and then there's an impact of global hash rate. As we all know, global hash rate has gone up considerably over this period of time. As a result of that, difficulty level has gone up considerably. Despite all those challenges, we have persevered, and our revenues have gone up considerably compared to last year at the same time. On the cost side, it's a similar story. Our cost of revenue, as we measure from a cost per petahash per day perspective, that's a KPI that we have set for ourselves. It has improved consistently throughout this year, and one of the reasons is the accretive acquisitions that we did. Those are driving our costs down. But also, in addition to that, is the organic growth. Resulted in decline of our cost of revenue. So if you look at cash cost of revenue, as we call it, without depreciation, that has gone down. And a reminder, that's a non-GAAP measure, as we disclose in our financials and in our shareholder letter as well. It has gone down 18% from a $45.2 in the third quarter of 2023 to $37.1 per petahash per day in the third quarter of 2024. And that's a testament of our strategy of driving towards near zero energy cost. But as you know, that we were a asset-light company just a year ago. And with the gigawatt addition in capacity, approximately, once it's fully energized, through acquisitions and organic growth, those acquisitions will reap benefit over a period of time, and we're starting to see those benefits. Sequentially,
wonderful,
quarter over
gentlemen.
quarter, we continue to you know, reduce our costs. So if you look at sequential quarter from Q2 to Q3, it's a 10% reduction with the same KPI that we just talked about. And then on the balance sheet side, obviously, as Fred mentioned already, we have over 27,000 Bitcoin at this stage, post quarter end, and that the value of that is obviously it has gone up considerably as anticipated. With the transaction, I want to touch a little bit more on the convert transaction that we did. And we have access to multiple sources of capital, Kevin, at this stage, which is encouraging. Yet it is a little bit premature in this industry as we evolve as an industry and as we become more mainstream per se, from a banking and financial services perspective. We expect to see more sources of capital open up to the sector. Having said that, the decision to buy Bitcoin on top of producing Bitcoin was highly accretive for us. We just looking at the over 6,400 Bitcoin that we purchased this year at an average price of $60,000 per Bitcoin, that has resulted in, as of today, it has resulted in approximately 50% increase in our BTC yield per share. And remember, this per share calculation is based on assumed diluted share calculation based on our best estimate at this stage. So in terms of value creation and value driver, that purchase is a great example, and that with a convertible debt, it made a lot of sense for us to execute that we did in August. Now, going back to combined restricted cash and BTC, our balance sheet continues to be extremely strong, one of the strongest in the sector, with the Bitcoin that we hold on the balance sheet. And from a long-term perspective, the whole Bitcoin holding strategy is already paying off when you look at these rate of returns. Now, a quick reminder: Bitcoin price is a commodity price. We don't control it; it fluctuates, and investors should expect that it will fluctuate over a period of time. But with the amount of HODL that we have, the second largest worldwide as a public company space, that we believe is going to create significantly more value than it has already created for us at this stage.
Well, thanks, Salman, and thanks for the detail on the mining cost per petahash at, I think it was 37. I imagine we'll see that decline again through the fourth quarter as the Ohio sites come online. Thank you very much for entertaining my questions, gentlemen. I really appreciate it. And Fred, thanks for digesting the questions and offering a shorter answer than you may have wanted to otherwise. I appreciate that. I'll turn the call back to Rob. Thanks again for having me on.
Thank you.
Thanks, Kevin. We really appreciate all the questions. We did, as usual, get some questions from our retail investors. Most of them hit on some of the similar questions that you were asking, Kevin. There's one thing that people are asking, I just would like to address to Fred, is how involved, Fred, do you expect us to be, MAR to be, in the shaping of U.S. Bitcoin and Bitcoin mining / energy policy with the incoming administration?
I think members of the incoming administration have been engaging with the Bitcoin miners regarding early thoughts on a variety of policies, and we'll continue to advise and consult and provide our input when asked. We're obviously going to take as active a role as is appropriate, but we're very focused on working with all branches of government, whether it be the executive branch, the legislative branch, or even the departments such as FERC, DOE, and others, such that the broader government, civil servants, the parts of the government that run and operate independent of elected or appointed officials, become educated into the benefits of how Bitcoin mining and our industry can benefit the energy grid and the deployment and transition of energy to a more electrified nation. This country is going to have to spend trillions of dollars to upgrade its grid, as it continues to deploy more renewable and intermittent energy generation. And until we have a more broadly broad acceptance for further nuclear energy in this country, all renewable energy will be intermittent in nature, which means you need the ability to load balance and you need dispatchable load. And that is something that Bitcoin mining is uniquely positioned to do. And that's something we're going to be working with all government departments to try and get them to realize the benefits, such that as they plan and build out the grid, considerations for large dispatchable load with Bitcoin mining are taken into account.
Thanks, Fred, and thanks, Salman. And thank you, everyone, for your time today. If you have questions that were not answered during today's call, please feel free to contact our investor relations team at ir@mara.com. Thanks very much and enjoy the rest of the day.
Thank you. All parties may disconnect.
Okay, so that was Mara's Q3 earnings, which they missed, but they did mine a whole lot of Bitcoin. On the stream, we got Colin Harper. He's the editor-in-chief at Blockspace.media and also co-host of the Mining Pod. And then Pennyether, who was on for our Riot Platforms talk just a week ago. And Pennyether is an independent analyst in the Bitcoin mining space. Welcome both to the chat. We're going to go through Mara's earnings, which we just heard. Let's decipher a little bit. Colin and Penny will probably be pulling from the Q3 letter that Mara published, of course, along with this.
Well, it's partially the letter, but they also have their 10Q out. So
very nice. So we'll go straight to the numbers. The 10Q. So I'll hand it over to you guys because you guys are covering these stocks day in and day out. Before I do so, though, be sure to subscribe to the Mining Pod on wherever you listen or watch shows, YouTube, Spotify, Apple. We publish 3 shows per week, all on mining. So be sure to check that out. Colin?
yeah, I mean, I think that this is about what you would expect from Mara with its quarterly earnings. I mean, we're just looking at a few of the quick numbers. Their revenue declined a little bit over the quarter from 145 million from Q2 to 131.6 million for the most recent quarter. You know, their cost of revenue went up from 85.8 million to 97.5 million. You know, Penny can talk more about this as well. Their SG&A costs went up, both, you know, they had like 40.5 million for cash-based SG&A and 60, I think, million for cash and stock-based SG&A. Not really too many surprises for me in this one. You know, I think that the story of Mara, and we can dig into this a little bit more as we continue to talk about these results, is that they're really moving away, like they said in the call, from this asset light strategy that defined them for many years. They cemented the fact that they're really leaning into asset heavy most recently with this like 200 megawatt acquisition of some mining sites in Ohio. And it seems like they really are leaning into this hardware play. I have no idea what the 2PIC is supposed to be. They call it looks like an immersion system. I guess it's based on the Auradine machines that they have heavily invested in. There's nothing that mentions Auradine in their most recent filing. They don't even mention 2PIC. As Penny pointed out in his most recent tweet, there's nothing to indicate that they've sold these units. I don't really understand why that was such a heavy part of this presentation. But overall, no really big surprises for me. Nothing like super spicy, other than the fact that I guess they have a shit ton of liabilities. They've got like 600 million in payable notes that are long term, and you know, not exactly the best thing when you've got 27,000 Bitcoin on your balance sheet that you could otherwise maybe leverage, you know, and pay down some of these obligations. But Penny, what are your thoughts, man? Just like quick reactions to that call. What are you thinking? Penny, you there? You were muted, but you're unmuted now.
Okay, you hear me now?
Yeah, there we go. How you doing, man?
Okay, I'm doing well. So first things, that convertible debt, I wouldn't be worried about it. It's convertible note, so they'll just they'll just issue shares to the note holders. So
is that 600 million is all convertible?
I think all of it is, yeah.
Because if you look at their financing for last quarter, there's a specific line item that says notes payable, and then there's also convertible. And I think the convertible is like 200 million.
Okay, I'll have to look into that. I didn't know they took out any debt, but okay. But yeah, I would say no big surprises. You know, I looked at some headlines that say they were expecting 151 million in revenue, and are you as confused by that as I am? They say how many Bitcoin they mined each month, and
Right.
adds up to 2070, and it's nowhere near 151 million. So I don't know
Yeah.
if they were expecting more hosting revenue or something, but there's not really a surprise there. I was surprised that SG&A went up on a cash, basically on every basis. If you look at it by hash or by estimated kilowatt hours, it went up. I was expecting it to go up just a little, or maybe even go down, but it went up, which is not good. Cost of revenues came in pretty much flat to last quarter, but their problem there is their cost of revenues are higher compared to pretty much everyone else. Um,
Yep.
so,
I can
yeah,
jump in on the
and
two-peg thing too.
they lost money mining. That's pretty certain, and that's only if you account for like their cash costs. It's not accounting for all the investments that get amortized over time, like the miners and everything else.
Right. So
But of course, that can change if Bitcoin goes up.
right. One thing you were right, Penny. They say it's a notes payable in their financials or in their financing, in those line items. But if you go down to the actual note 14 for their debt, it says total convertible notes net of discount 618.6 million. So
Okay,
that's
so there
not
might be
really
some way they have to name it if it's has some certain conditions on the note
right.
itself. I'm not sure.
So not a consideration or worry for the debt piece, but if you're a Merrill holder, more dilution incoming through 2031.
Well, another thing I looked at was the change in the number of outstanding shares. So in Q2 it was 294 million. Sorry, in Q2 it was 287 million, and at the end of Q3 it was 304. So that's a change of they issued. That's just the total shares change. In terms of like what they actually sold as part of the ATM, it was 17.3 million, and that's about $321 million at
Yep.
18.50 a share. And then subsequent to the end of the month, the end of that filing, so between the end of that period, I guess, what was it, September 30th and November 5th, so they ended the quarter at about 305 million, and then on November 5th they were about 322 million. So they already sold 17 million shares between in about a month and 5 days, which is more than they sold the entire quarter. So I
Yeah.
found that interesting.
Yeah, and one thing, Nick Hansen, CEO of Luxor, just popped in just to reiterate the SG&A cost is 63.73 million. That's cash and stock base. Only cash base is 40.4 million.
That's right. Yeah.
And going back to what you were saying, Penny, about the at the market offering, like you said, I think you said 321 million for that last quarter. The quarter before it was 300, or the quarter before it was 489.3 million. In Q1 it was 344.9 million. So for the 9 months that we have on the record so far this year, $1.15 billion worth of equity issuance for Marathon. I think that is the most out of any of the public miners for this year. Am I right about that, Penny?
I haven't compared it to other ones, but I would find it pretty hard to beat.
Yeah. Okay. Yeah, I should say it's projected to probably be the most. The next closest would be probably Riot. We covered that last week. I think they've had somewhere in the ballpark of 750 million so far this year. Maybe CleanSpark gets closer to that, but I don't really think any others, except for maybe Core, would even come close to touching that. I mean, that's a staggering amount of dilution.
Well, Coors isn't selling shares for money. They're just converting certain things into shares that were previously debt.
Okay. I haven't been keeping an eye on them. So really, then it's just Riot and CleanSpark maybe would even come close to that, but probably not even. So yeah, I think that you're right to say, Penny, like not anything too, out of the blue here. To your point about having a really high cost of revenues, though, I mean, this really does go back to something we said at the beginning of the stream, that they've been really gunning to lower that by vertically integrating more. Famously, they were one of the only giant miners up until like the last couple of years that were still hosting all of their rigs and other facilities now. I think with the Ohio acquisition, they say that they are on track to have 70% of their hash rate in-house rather than hosted. So we should see that number continue to come down, but they still have a pretty high operation cost, I think, because of that. I don't have figures in front of me for their power costs, but it has ranged between, depending on the quarter, like $60 to $70 per kill or per megawatt hour. And that's just for direct costs. That's not even including other overhead.
I want to do the 2-pick thing before I forget. This is
okay.
bad time to interrupt.
Well, I have a okay.
It is bad time to interrupt.
Let Penny rip for a second.
So in terms of cost of revenue, so that's one of the things I look at pretty closely. And they don't tell you how many. So how much they spend on cost of revenue. That's in the filing. You don't know how many kilowatt hours they use, but you can guess that based on their exahash per second, like from how many Bitcoin they mined, and you can just a joules per terahash that you can just guess.
Right.
They disclose it in some places, and I have that cost of power. It ends up being about it ends up being about 6.2 cents per kilowatt hour.
Yep.
Which is, if you compare that to other miners, it's pretty high.
It's pretty high. Yeah.
Yeah, and that's also including it's pretty high. That's $35 a hash cost already. That's in present day cost per Bitcoin, that's like $55,000 a Bitcoin. So it is a pretty high cost of revenue, and I'm not sure. That could. If you estimate that they have a lower joules per terahash, so they're more efficient, then it ends up that they have less kilowatt hours. So the cost per kilowatt hour would go up. And if you estimate that they have a much less efficient fleet, then you'd assume they used a lot more kilowatt hours, and their actual dollars per kilowatt hour might be lower. So, but either of those cases, it's not great. You don't want them to say you don't want to believe they have a hugely inefficient fleet, and so they're actually using more kilowatt hours than you think. So it's actually cheaper per kilowatt hour, because that means they have an inefficient fleet. And if they have a super efficient fleet, that just means they're paying more per kilowatt hour. So either way, they're paying a lot for cost of revenue relative to their hash rate.
Yep, 100%. But hey, who cares when you can just keep issuing shares to pay down your operational costs, right?
And they speak a lot about vertical integration and efficient this and efficient that, but I didn't hear any talk or any questions about why their costs are high or what they're going to do to. It's almost like they talk about everything else but their mining performance.
Yeah,
it's like that's almost literally true.
100%. All right, well, the toothpick system.
Okay, so 2-pick is their 2-phase.
It's 2-phase immersion, right?
It is a 2-phase immersion system. They debuted it, I believe, in the spring at the Digital Wildcatters conference, or at least that's the first place I physically saw it. I think it was one of the first places they displayed it. And the player on that is like you have 1-phase, single phase, or whatever, and then 2-phase. 2-phase has not really made a big splash in mining. There's some people who played around with it in like 2017 or so, but it doesn't really make sense for Bitcoin mining because there's better ways of just doing it with single phase or 1-phase. And it's way more expensive to do 2-phase. Plus you have all these additional chemicals you have to deal with. So a lot of people have chosen not to go that route because it's too expensive. So it was kind of odd when Marathon decided to go forward with it and then make this system. The first system they built it with was at Auradine units, like you said earlier, Colin, which Marathon has an investment in Auradine. They're trying to become like that vertically integrated system like everyone has, where you're not just a miner, you also build miners, you also build infrastructure. But then they went around and spun this as like some sort of AI infrastructure piece when it doesn't necessarily make sense for that.
That was really wild because it's like they have.
It's very, very different.
Oh, it is different, but Fred has like famously kind of ducked the questions on AI, right, for like the last year. And he kind of, he was on that call right there, kind of just laying it out that he doesn't think that Bitcoin miners are going to be able to compete against hyperscalers, right?
Yeah, and I think there's probably good evidence for that besides a few people. Cores went the right way. And
I just find it odd to say that and then in the same call be like, but also our 2-phase immersion infrastructure is going to be able to host or going to be able to use GPUs for AI and high performance.
Didn't he also say that, he doesn't want to do CleanSpark and Riot any favors by moving into HPC? So in that sense, he thinks Bitcoin mining is better?
I think he was saying to Kevin Deedy, the H.C. Wainwright analyst, who I think is also a managing director of some of their research. I think he was saying that he wasn't going to go into the specifics of their 5-year plan. And he
Oh,
kind of
okay.
had a chippy comment where he was like, I'm sure that you would,
Yeah.
your friends at Riot and Clean Spark, which Kevin covers, would be happy about that. But
So really quick, I want to finish this point. The interesting thing with 2PIC is they are trying to differentiate themselves from other Bitcoin miners by showing like some technical acumen here. But this is a path no miners go down because it's well trod before and does not end up going well to build this sort of infrastructure. There's also no evidence that this is what anyone would want for AI. Like a lot of the direct cooling stuff that we've seen, let's take Hut 8, for example, right? They have like this new unit with Bitmain and they're doing direct cooling to chip. They worked with Bitmain for quite a while to get that going. It's built into a traditional rack server model where you just kind of slide it in and then you have the liquid cooling there directly to the chip. That's what the AI teams want. This is like this whole like box infrastructure thing, which to my knowledge is not exactly what people want. And so just all around, it seems really weird. It's also weird that they focused on it so much in this presentation for their quarterlies when we don't have any evidence of sales. There's no knowledge of sales to date. They didn't really talk about any numbers around it. So why is it like such a big part of their presentation? Maybe they just want to show that technical acumen again, but to me, that kind of comes off oddly.
I find it weird. Also, I just had someone message me. They're going to remain undisclosed, saying that at Empower, the 2PIC machine actually malfunctioned.
Oh.
This person used the word blow up, but it basically let's just put it this way, that it didn't work very well. I'm kind of with you, Will. I have no idea where this is coming from, but this is kind of part and parcel for Marathon in a way. They've thrown out a lot of different business lines over the last year, from Enduro, their sidechain platform, to Slipstream. They've had all of these weird R&D things that they've started throwing out. And to me, it's almost like they're trying to show that they're more than just a Bitcoin miner, while all these other Bitcoin miners are pivoting to AI and HPC. I think that maybe you just stay in your lane and you do what you usually do, or you stack ungodly amounts of Bitcoin, dilute your shareholders, and just pump your stock price because you're one of the most well-known miners.
Yeah, there's a comfort in having a large market cap.
Yeah. What were you gonna say there, Penny?
I'm not sure if it's to differentiate from the HPC miners. I think, this perhaps I'm being too skeptical here, but I think it's equal parts of smoke and mirrors against their actual operational performance, which is now they're going to be eclipsed by, like, they're neck and neck with Riot and hash cost. But every time Riot adds hash rate, their SG&A, on a per hash rate basis goes down. Like their SG&A is growing slower than their hash rate. That's not true with Mara. I don't know what they're spending all this money on, but it doesn't result in more efficient operations, and it's not resulting in more revenue for anywhere else. So if you just look at them as a miner, like, I'm fairly confident they've burned a lot of money to get to the hodl where they're at. And then you're left with, they have all these miners and all this infrastructure, and it's not mining Bitcoin very effectively compared to peers. So, it could be, Bitcoin could go up a ton, and then suddenly it looks a lot better because now they're mining the Bitcoin for, even though their costs are high, they're mining it for, a much higher price. That could happen. But like historically, which is where they stand right now, it's just they're not an efficient operator. And I feel like they'll do anything to take their eyes off that. There's what happened to the Q&A? It was replaced with an interview with, like they don't speak. It's like sort of like they talk about everything but their costs. So maybe I'm being too skeptical here, but as the quote biggest miner, it doesn't look good because every time they add hash rate, their costs go up, and all the other miners are now adding hash rate and much more efficient hash rate as well. Their metrics are going to look a lot better. So I don't know how much longer they're going to be able to say that they're the number one Bitcoin miner, that they have the most exahash or whatever, any of those things.
Right.
It's sort of like, I feel very strongly they're going to be eclipsed soon, and I think a lot of their value is tied up in them being biggest market cap. Certainly issuing tons more shares is, helpful in that regard. It increases their market cap. So I don't know. I don't view them favorably right now.
Can I ask two questions I want to get to? Maybe not really just specific questions, but things I want to talk about. Ohio sites that they purchased, that news came out, I think, earlier this week or late last week. And then also the Bitcoin purchases that they've made over the quarter. Maybe we can start with the Ohio ones, if you guys remember those. And I can pull up the Miner Mag article.
Ohio
If
is the new
not-
Texas, bro.
Ohio is the new Texas. I mean, the cost per megawatt hour or the cost per megawatt for the build is fairly low. What do you guys think about those purchases, though? It says pipeline of 300 something megawatts.
So
Some
first,
of it's already available.
I'm not sure about the cost being low, but I have to go back and like consolidate all the other deals that have gone through. But when they're counting megawatts that aren't, that are available but aren't built out yet. So in that cost, if you actually look at, the cost per megawatt that you use
Interesting.
right now,
Yeah.
it's a different number. But I don't know, to make it apples to apples, you have to look at the other deals that were announced in this year and see what those were on the same terms, whether it's megawatts existing or megawatts available. But I just want to point out that includes megawatts that aren't built yet that they think they'll have by, I think, some date, like middle of 2025 or something like that.
They said $270,000 per megawatt, which is crazy. And like you said, Penny, though, that's financial engineering because they're counting interconnect agreements, but nothing that's actually energized currently, which is somewhat fair in the sense that that power is in place and they don't have to go through the rigmarole of getting it approved.
Yeah.
But that's not the cost to actually completely outfit the site. That
Right.
being said, probably decent price. I think the one big benefit of this, and Kevin kind of mentioned this in the call, is that they're going to be in the PJM energy market, which services parts of Ohio and Pennsylvania, and that's one of the more favorable markets in terms of them being able to market load and to do things like demand response and participate in similar programs that we see in Texas. We had a podcast with the Bitfarms guys, Alex and Ben, a few weeks ago on the Bitcoin Stock Show, where they talked about some of the benefits there. If y'all are curious, I recommend going and checking it out. So to me, it seems like a good idea for them to be there in general. Ohio is a great jurisdiction to operate in if you're a Bitcoin miner for those reasons. That being said, I'm kind of like you, Penny. I'd be really curious to see what the actual acquisition cost of something like this was.
Okay, let's talk about Bitcoin price or Bitcoin purchases.
This pisses me off. I have no idea why you would do this.
Oh, are you kidding? I think it's the best decision it's the highest ROI they've gotten on their use of capital of in their history.
There's a good argument for it, Colin.
I mean, they're mining coin at a loss. That could change if Bitcoin goes up, but they're not getting that much of a discount on the Bitcoin compared to what they paid, to set up the whole operation of mining it. I'll put it that way.
I guess
so
I would just say, if I were a Mara shareholder and I was getting diluted, so Mara could go out and purchase the commodity that they are supposed to be purchasing under spot, and that's the entire reason why I'm invested in the stock, it makes no sense to me. And what other commodities field, and I get it, this is a different industry.
What do you think of MicroStrategy?
I think MicroStrategy is hot garbage, but that's
so I've changed my view on MicroStrategy because I view it as there's some premium there as for it being a financial instrument. It's sort of like MicroStrategy shares are tokens for whatever's put into that token overall. Whenever you buy a token, they're going to use that money to buy Bitcoin eventually. It's almost like an ETF. It's almost like an ETF, except they don't have the whole like issuance and creation destruction mechanism. They have instead, they have options though, and you can buy MicroStrategy, and it's maybe you can buy MicroStrategy when in accounts that you're not allowed to buy Bitcoin ETFs, or in funds where your stated goal is, crypto or it's technology or whatever, but you still want Bitcoin exposure. So I think there's some premium there because they have something that other companies don't.
Yeah, that's true. And
but I don't think that applies to Mara. I think a lot of their shareholders can't really differentiate between like quantitatively. They see a big hodl and they see when Bitcoin goes up, Mara gets a lot of quote net income, and that's good. And right now I think about I don't know how many dollars a share is just Mara's hodl, but you have to explain what the rest of that is, and that's pretty difficult to do.
Yeah, and just to kind of capitalize on some of those points, Penny. I totally get the point with MicroStrategy. It's like a levered ETF play. You know, it's high beta. It makes some sense because like they're a software and services company that has kind of become a financial instrument, like you said. But at the end of the day, Marathon is a commodities producer. They're producing Bitcoins. And in no other commodities producing industry do you have people going out on the market and YOLOing into that commodity that they produce.
Yeah, I understand that.
You know what I mean? And I get it but to your point, I get it. It's kind of like do you want to fight physics or do you want to just lean into the laws of nature that we have? And they are going to see favorable stock price gains because people are still treating them like a proxy high beta play to Bitcoin. So maybe it's the best thing for stock price growth in the long term or in the short term. But in terms of actually long-term stability, I think it's kind of a cheap trick. And I would rather see them, if I were a Mara shareholder, take some of that money and invest it into lowering their cost of revenue, lowering all of their production costs.
Well, that's what they say they've been doing for the whole, vertical integration, right? That's what
Yeah.
So I largely agree with you. Like when it comes to HODL versus not HODL, as an investor, I'd rather buy a company whose stated goal is to just be the best at mining or to use their capital and to invest it into mining because they think they can do that really well. And leave it to me to buy Bitcoin. I don't want to pay a company to buy Bitcoin. On the other hand, just because they HODL, I don't really count it against them. Fine, dilute me and buy the things. I'm just going to assume that some dollars per share of your share value is Bitcoin, but I'm going to treat the rest of it like it's your business. It's something that you can look at it as a sum of parts, or you can look at it as like, let me deploy my own capital by Bitcoin. It's pretty much a toss up to me. It makes no difference. To your point though, I think they, when you do the HODL, you do lean into getting a potential premium just from shareholders not understanding it or wanting the proxy or all those things. So, and if their strategy is to continually dilute to get money to put it into other things, then maybe it's not a bad decision to buy Bitcoin, have their share price go up, or have people FOMO over it and then sell more shares at a higher valuation, or just keep doing that.
100%. Will, are you still there? Did you leave us? Did you fall into a tunnel?
I'm here, but I have to leave soon.
Okay.
But
should we maybe wrap it up then with kind of final thoughts?
if you guys want to keep jamming on it, feel free. It just depends on.
I'm ready to wrap it up.
Okay.
Here we go.
Do you, well, final thoughts, Penny? Anything that you were expecting from Mara going forward, or anything that you think investors should take away from this earnings call?
Well, I think Mara is just going to continually dilute. They take the money, they talk a big talk about vertical integration and all these other projects and throw tons of things at the wall and see what sticks. But the results, to me, they speak for themselves. They're going to be the highest hash cost miner of any miner. They're going to get, riots improving, and they're getting worse. So I have to say I'm not a fan. They have a big HODL, that's great, but you can still back out what the rest of the company is worth, what it's valued at, and I don't see a lot of progress there of what they're actually doing to generate revenue. And the shares being issued continue to go. They're flying off the shelf. So I'm not very. I wouldn't want to invest in them.
Well,
There are some strong thoughts. I do think there's something to what horse do you want to bet on? And if I was going to bet on different horses, there's other ones I'd pick. There's other ones that have huge pipelines of energy that are focused on things they can win, like focusing on getting hash rate deployed, focusing on making ASIC chips, focused on AI HPC conversions. And I think there's this mushy middle group of Bitcoin miners who are trying to do so many things to please the market, but they actually don't do it well. And we're not in 2020, 2021 anymore, where you could kind of have this veneer of knowing what you're doing. There's too many good operators these days, and the markets are going to get very, very liquid with all this Bitcoin ETF flows coming in. I think that there's too many people knocking at the door, and that's why you saw the emergence of CleanSpark. And I think you're going to see a few of these other $1 to $2 billion market cap miners start to eat away versus their competitors and peers and get a multiple from where they're at right now. So yeah, I also don't think that would be, and we don't really give an opinion on buy or sell on the mining pod. That's not our job compared to an analyst like Penny or other people, but I think there's other miners that I would personally find more interested in.
Yeah, I just wouldn't
Yeah.
sell anyone to sell anything right now if Bitcoin's ripping because you're gonna get fucking wrecked.
Or just move it to something. Just move it to a
Yeah.
faster horse. There's lots of really good miners out there.
That's true.
Speaking of which, next Tuesday we'll have a podcast with Reggie Smith. He's an analyst at JP Morgan. We recorded that today. So if you are listening to this, like and subscribe to the YouTube, Twitter, Spotify, Apple, and you can get that really awesome podcast coming out next Tuesday. Colin, I'll give it to you to wrap it up, though.
Yeah, I think going back to the horse narrative, the thing is Marathon has been one of the faster horses historically, just by the fact that they are one of the oldest public miners, right?
Yeah.
They pivoted to Bitcoin mining around the same time Riot did. And if you look at them and Riot, essentially they get a lot of investor mindshare because they are so old and they are so big at this point. So whether or not they're going to be the fastest going forward, definitely up for debate. And I do think you're right. Over the last few years, we've seen other miners like CleanSpark that have totally outshined them in terms of their ability to deploy. Same thing with Iron recently with their upgrades, and a few other miners out there too, like BitDeer. But going forward, I think that Penny kind of hit the nail on the head. If I were a Marathon investor, I'd want to see them lowering their costs. And I don't know if they're going to actually be able to pull that off. And just final thing, I think the emphasis on the 2-pick thing is very strange. And it almost seems like they're trying to, in some ways, take credit for Oradine's machines, because they said like we're developing the system, but they're really probably just taking Oradine's systems or taking Oradine's miners and throwing them in their immersion tank. So strange thing. It's a bold move, Cotton. We'll see how it plays out for them. But otherwise, really appreciate everyone tuning in. Penny, thank you for joining us as always, man. Really,
Thanks for having me.
Really always, man. You're always welcome on. Love having your insights and thoughts, and let people know where they can find you.
Who do we have later this week, by the way?
That's a good question.
There's Wolf, I think, right?
Bitfarms just got scheduled. Might be tomorrow. Wolf.
So I'm looking forward to CleanSpark because I sort of view them as like a gold standard in terms of their actual metrics. Not to say anything about valuation, but just their hash costs and stuff are pretty good to look at of like a large size, efficient operator, and it's kind of good to compare other miners against them. But yeah,
sure.
thanks for having me. Thanks everyone to tuning in. It's been fun.
Cool. Before we go, if you missed this, check out the podcast version. We'll be publishing this shortly on the Mining Pod stream on Spotify and Apple. Cool. See you guys here shortly for the next stream. Peace.
This is y'all.